Gautam Chhaochharia, good morning. Do you agree with my assessment that one should now revisit wholesale banks, consumer discretionary and select NBFCs?
Good morning. The question of time frame we are looking at from a 2-year perspective, obviously this sets the base for a more sustainable recovery medium term perspective. But in the near term, the interest rate transmission for the banking system will obviously help in both corporate side as well as the consumer side, because even the corporate side, a lot of the stressed assets will benefit from lower rates. The consumer side, the benefit in terms of EMI will be much more in terms of the mortgages side, to some extent on the car side, but less so on the higher yielding loans where the EMI impact from lower rates is slightly lesser.
Within the banking space, do you think a huge divergence will emerge now? Because the wholesale banks which are dependent on wholesale banks, they will gain because the wholesale rates will come down. Banks which are dependent on fixed deposits, they will lose because the fixed deposit rates in the country will come down.
So yes and no. So gradually in the short term from the rate cycle or the rate cut immediately, you could say what you're saying will play out. But over the medium term, it also becomes, when you're talking about deposits, etc., a lot of the banks which have high percentage of deposits, etc., also get these deposits because of their franchise, not just because the rates are attractive versus other asset classes. So yes, it would play out in the immediate term because the immediate term benefits from short-term financing or short-term wholesale borrowing will flow through immediately. Over the longer term, I don't see that discrepancy playing out in terms of deposit financed banks being hurt.
We're just 2 minutes away from the open session, Gautam. I do see that you have an NBFC as your top financial idea, LIC Housing Finance, I believe.
Yeah, we overweight financials overall for a long time because of a long held view on aggressive rate easing cycle. We've talked about 200 basis point lower rates in less than 2 years since last year, which is kind of playing out now. And banks has been a big overweight call because of that. LIC, both because of the rate cycle which is playing out, as well as of the fact that they cut the risk weightage for housing. That will benefit LIC housing specifically.
Gautam, I see your year-end Nifty target at just 8,200. Isn't that a bit bearish?
Not really. Again, it's a question of short term and medium term. So we're still constructive India from a medium term perspective. Definitely a very bullish India on a relative basis, but absolute basis from a next 3 to 4 month perspective, we're still sticking to our Nifty target of 8,200. Because you have to remember that in the near term, growth will remain sluggish, and that's where the markets might still continue to face disappointment like it has for last 1 year. And that's an area which we are still worried about. Because you have to also remember that if you go back to the last decade cycle, early last decade, it took 2 to 3 years before the lower rates really started to get the markets up sustainably. In the near term, typically the rate cycle easing also coincides with growth being sluggish, at least in the initial part of the cycle, and which is where we are right now.
Is that very rare Indian mid-cap IT companies have managed to scale up. You know, we can talk about the digital opportunity, the engineering opportunity, but if I look at the entire genre of mid-cap IT, hardly any mid-cap companies have really migrated to the large league, so to speak.
You know, that's largely because of the large league of IT services companies in India. The business model is an offshoring model, and where globally the market has moved towards bigger sized projects and consolidation. So it becomes very difficult for an upstart to come and become big unless they have something differentiated offering.
Gautam, the other problem for Indian market has been that we are getting consistent selling from foreign institutional investors. On paper, we can market as India is the only game in the town, the most resilient and the most visible growth story. So if the macro is in place for India, if the economy is moving in the right direction in terms of trajectory, what explains the selling pressure?
It's just the fact that India is very well owned. You look at emerging market funds, you look at global funds. India's weightage in emerging markets versus its own long-term history is near all-time highs. So the investors are already fairly overweight, and if they keep getting redemption pressures because of concerns around emerging markets or about global markets, then obviously India also bears the brunt. In the initial, and this shows up if we look at last 3 to 6 months. In the initial round of emerging markets correction, India continued to outperform fairly handsomely. But over last month or so, that outperformance has narrowed down because now if they keep getting selling pressure, there's no way they can't sell India, because they can't really go overweight India beyond a point.
The final question from mine, at least, I'm looking at the stock calls that you had today, and while we've discussed LIC Housing Finance and a few others, you're clearly bullish on urban consumption even now. Jubilant Food, Page Industries, to an extent, United Breweries, etc., remain your top ideas?
No, quite the contrary, in fact.
Okay.
We are cautioning investors from a near-term perspective on urban consumption, because we ran a exhaustive consumer survey which kind of supports our top-down thesis that urban demand recovery will also take much longer than what the market is factoring in, because of two simple reasons. One is, while inflation has come down, so has nominal wage growth in both nominal wage growth for broad India, which means real incomes are not growing, and job creation, as we all know, is not picked up in any meaningful way yet.
Gautam,
so let me clarify, Gautam. Are you saying that Jubilant Food, Page, etc., are not stock recommendations as of now from the house of UBS?
So I won't get into individual stock, but we do have a sell on those two names, and Consumer Discretionary, we are still maintaining our neutral stance.
okay, a neutral stance, that's clarification coming in on Consumer Discretionary. Gautam, always good having you on the show. Thanks much for taking the time out.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.